Well, and you're seeing Detroit peel back. You're seeing some of the European players. And that's why this was a poker move for the ages by Musk in terms of cutting prices, going after volumes. Now they're in a position of strength. And I believe this is just the next phase of the Tesla growth story, where I don't think they stop at $1 trillion. I think there's just the middle innings.
People love to hate on Tesla because I think they love to hate on Elon Musk. And I'll let people decide whatever they want out there, okay? A bombshell report from Reuters claiming that Cybertruck deliveries are, quote, hostage to battery production hell. That is their phrase, not ours. 9 anonymous sources told Reuters that Tesla has not been able to, quote, crack dry coating at the industrial scale needed to make 4,680 batteries fast enough to hit their production targets. Now, we reached out to Tesla for comment, but have not received a response. And, of course, why would we? Because they don't have a PR department. So there's literally, I don't even know who emailed. Anyway, under these circumstances, Reuters says Tesla would only be able to power roughly 24,000 Cybertrucks a year. And if true, it would lead to missed production targets. So should investors take this report as a warning or just another swing at a company? Let's be honest. Some people just love to hate on.
Have you ever wondered if Tesla may be worth $1 trillion again? How likely is this? And what are investors and experts saying? Join us as we seek answers to these intriguing questions.
We're talking Tesla. Shares are up about 107% so far this year. Kev, Dan Ives, the Uber bull that we have on the network occasionally, put a price target of $350 on this from $310, says it can get to $1 trillion market cap in 2024. He's still bullish, but he's always bullish on Tesla.
It's the question is for Tesla this year, and it's one of the Magnificent Seven. It's one of the charter members, so it's in the play with all these other names. But what's the demand for EVs going to be, right? Is it going to be enough? He's going to be the leader in EVs.
Right.
Is it going to be enough where he can get margins to go back up? Because, he's made his play to get market share. He's done damage. Remember, you're starting to see some mea culpas from some of the leading car companies, like pushing back.
Ford was one. They're pushing back production.
Switching to hybrids instead of pure EVs.
Yeah.
They're doing other things. So, but, what's the self-driving software going to be? Remember, that's $12,000 a car for self-driving, and people are paying it. So I think the problems are valuations. Does he continue to lower prices? They don't like that in the stock. Right. So you got to see some numbers. If the numbers show up in sales, then these price cuts and the competitive advantage he has will start showing up.
Yeah, his margins have come down, but as I mentioned, they're still above the others like Ford, GM. In this space, Joe. But Kevin brings up a good point. Is this all going to be about the consumer still wanting electric cars at this point? Or, are they going to run out of money where they actually can't buy new cars? Is that going to be maybe a theme in 2024? Your thoughts here, Joe?
I mean, it's a theme in 2024 for all the durable goods, right? I mean, the last print looked good today, but, it's something we have to kind of keep an eye on going forward. So, yeah, it's a story for Tesla, but it's a story for all the automakers. The only difference is Tesla gets a monster multiple where the other ones don't. I mean, that's the bottom line, right? Because of their first mover multiple that they get. It's going to be an interesting story. Dan Ives, as you mentioned, his call for the upside. I think it really comes down to the health of the consumer, because I do believe that there is still demand for the EV products, and a lot of it's going to come down to the demand in China and how much of the recession that we saw in China, that kind of deep recession, are we on our way out of it? Right now Tesla's already starting to raise prices in China, and they've seen some steady demand in this region. I think that they've kind of taken the steps that they needed to kind of squash competition here with the price cuts. And, now we got in an area where you talked about those margins, right? Gross margins, they did decline from 27% in June 22 down to 19% in October of this year. So, they pushed them down, they squeezed out competition, and can they stabilize prices at these levels? And then kind of get back into that above 20% gross margins. I think if they can do that, and if that's a story for 2024, then the company and the shares could do very well.
Yeah, and I like the point that Kevin brought up, licensing, right? full self-driving, that is going to be a product they're going to be able to license. They're already getting all the other OEMs to get on their supercharger network also. Yeah. So maybe, that those are high margin businesses.
Can you imagine if you told Ford and General Motors and Stellantis 19% margins? They'd be like, oh my God, I love 19% margin.
Tesla has a distinct market dominance and innovation that distinguishes it from other automobile manufacturers. The automaker has become synonymous with electric vehicles, pioneering the industry and capturing the public's imagination through an unwavering commitment to sustainable energy and a laser-focused approach to innovation. Tesla has consistently pushed boundaries and set new standards, all of which have positioned it to be a prominent car company, with its stock representing the best and most lucrative of all other EV makers globally. However, despite this growth, stock investors and host of the Mad Money Show, Jim Cramer, does not believe that Tesla can be worth up to $1 trillion, predicting that Tesla will have a tough year ahead and probably will not do well in 2024.
On Tesla, because I think they love to hate on Elon Musk. And I'll let people decide whatever they want out there, okay? Is Elon Musk hurt the company or help the company at this point? Because people don't realize Musk is not running Tesla. There is a management staff that's very quiet. They're not on Twitter. They just go about their job every day. But he's the face of it.
He's the golden part.
He created it. But there's a whole team actually running the company.
There's a team that runs it, but he is the hearts and lungs of Tesla. And that's when, from a brand perspective, as we've talked about, I still believe right now that's a contained issue relative to what's happening in Tesla. The irony is this quarter, we see a record quarter in China. So we're not actually seeing demand.
Even against BYD.
Even against BYD.
Which is the Chinese car company that's taken over China. I mean, and probably soon to come here.
Soon to come here, but in China, they've held their own, and I think this is going to be actually a record quarter from a China perspective. I think we go into this next year, margins increase, they gain share, and now full self-driving, I'd argue the AI piece could be $75 per share, and I think that's what we're going to be talking about 1-2 years from now.
In addition to being an electric vehicle manufacturer, Tesla is also an AI and energy company. Carmaker's deeply rooted innovation culture and willingness to break free from norms and push boundaries have resulted in breakthroughs in energy storage and renewable energy sources in addition to electric vehicle technology. We believe that the automaker's roadmap, which includes the Cybertruck, the growth of its charging network, and the ongoing developments in autonomous driving technology, have the potential to act as catalysts and raise the company's valuation to $1 trillion. Hi everyone, and happy return to Tesla for the 2021 season. Having reached the $1 mark, Tesla is now the 6th most valuable corporation in U.S. history and ranks 5th among the CF 500's most valuable companies. At that moment, the automaker's shares surged almost 12 and ultimately closing at over $10.25 first. Hers announced a record order of 100,000 Teslas for its fleet. A second prominent Morgan Stanley auto analyst Adam Jonas increased his price valuation on Tesla to $1,200 per share. This one day gain put Tesla just over the $1 trillion. These two positive developments contributed to this incredible achievement. Mark had a market valuation of less than half that of Microsoft, which was valued at $2.3 trillion in Apple, which at the time was the most valuable corporation in the world at $2.05 trillion. Who knows, maybe this is about to happen again. While some analysts like Jim Cramer do not think that Tesla will return to the $1 trillion club anytime soon, we think there's a strong possibility for this. Before we continue, if you like this type of content, make sure to hit that like button and subscribe. Investors recognize that Tesla is not just an automaker, but a driving force behind the transition to a sustainable future. This recognition, combined with Tesla's continuous revenue growth, market share expansion, and technological advancements, fuels investor confidence and contributes to the company's potential for a massive valuation in the future, despite its undeniably captivating potential.
Mark Fields. Mark, good to have you back on. What's your take on this Reuters report, other than manufacturing is hard?
Yeah, well, manufacturing is hard. And to your point, listen, I think anytime you're introducing a new technology, you're going to go through teething pains. You're seeing it, for example, with GM and trying to scale their Ultium batteries. They're having lots of problems. That's why they haven't had a lot of production. So in Tesla's case, they're actually implementing obviously some new technologies here. As you said, it's a dry technology versus a wet. And, I think Musk, during his launch of the Cybertruck, which are going to use these batteries, what they call these 4680 batteries, he said, hey, listen, we're not going to be ramped probably until fully ramped until mid 2025. So I think he's kind of set some expectations. But I think, Brian, the more important thing is for them to make their 250,000 unit capacity production run at rate in 2025. It's like a 10x increase in their battery production today. That's very, very aggressive. But, they got time to do it. We'll see if they're able to. But at the end of the day, every automaker is going to be struggling with these issues. We've seen other automakers struggling with them. And, Tesla at the end of the day is a technology and battery company. So when they get through this, they'll be in a pretty good competitive position. But right now, it's tough scaling new technology. Yeah. It's tough going from the lab to production.
Toyota just had a 1 million car recall due to airbag issues. It got, you could find articles, but it didn't get a lot of attention, right? Relative to everything that happens with Tesla, gets a ton of attention. And you obviously know, Mark, that it's probably because of the founder, Elon Musk. Do you feel like Tesla does get an outsized amount of interest